All right, you ready to go?
I'm ready to go.
Let's do it. Hello, everyone, and welcome to the show. My name is Chris Alaimo.
And I'm Ben Gassaway. Together, we are the Amateur Investors.
This podcast is our open source journal of everything we learn about investing and wealth management.
We're here to explore the key concepts, market dynamics, and investing strategies that will assist you on the path toward financial independence and financial literacy. Our mission is to build us up from amateurs to experts.
All suggestions are our own, and we recommend that you do your own research before taking any investment advice. See you in this week's episode. We hope you enjoy it.
Hey everyone, welcome back to another episode of The Amateur Investors. For this episode, we're going to do something, I guess, a little bit different. I feel like Chris and I, whenever we get together one-on-one, we always do something a little bit different. But we felt that it would be prudent to do some FUD busting on Bitcoin. So for folks that aren't familiar with the space or are new to Bitcoin, this is something you're going to hear a lot about, that acronym FUD, and that stands for fear, uncertainty, and doubt. And if you are new to the space, and honestly, even if you're not, you're likely surrounded by conflicting opinions, and some of those may seem valid, some of them are. But I think really what this episode serves to do is a few purposes. One is to provide really high level insights into the erroneous claims made about Bitcoin. We're going to work to assign some validity in maybe some of these respective arguments if we feel that it is warranted. And most importantly, as we always do, we invite, our audience to take the time just to question absolutely everything. I think at the end of the day, what Bitcoin is sort of inviting us all to do is to take personal financial responsibility. There's no FDIC for Bitcoin. There's only going to be 21 million. It is up to you to buy it, store it, and custody it as safely as possible. And that's up to you to educate yourself. So we're here to help. And we hope this is a useful episode for you guys. So we hope you enjoy. So Chris, kicking this off, I apologize for sort of the congestion. It is summer allergy season, and I think I'm also allergic to FUD. So on May 12th, Elon Musk announced that Tesla was no longer going to be accepting Bitcoin. I'm not going to really give context or my thoughts about this, but what was your impression of this? And do you think it matters?
I don't think it matters in the long term. I think we definitely saw the price go down because of that. I don't think it was completely because of Elon's thing, but it definitely affected it. I mean, he has 54 million Twitter followers alone. Like, obviously, when there's that many eyeballs globally just looking at what this guy says, you don't want to say he has the ability to move markets, but he has the ability to move markets. I can tweet something about Bitcoin, and there's not going to get as much traction as Elon Musk. I think it's kind of funny because I don't know anyone that is a Bitcoin person that would be giving their Bitcoin to a company for a depreciating asset. It's like you're trading the best asset in the world for a depreciating asset. Don't get me wrong, Teslas are very cool. They're very futuristic. I think they're, cool in the way they're designed, and like I'd love to try out one or have one potentially one day. But I just think it's very funny that like I don't know who would be doing that. So I don't know the numbers. I don't know how many they actually sold that people actually gave Bitcoin in order to get a Tesla. And then not only that, it's a taxable event. So it's not even just like I give them dollars, they give me a Tesla. It's I take my Bitcoin, I have to sell it for whatever the current value of Bitcoin is in dollar values, and then I'm taxed on the gains as property for that. So it's just a bad trade all in all. I don't think this hurts Bitcoin long-term at all. It's just like a blip in the radar. I saw it as an opportunity. When the price went down, I bought the dip. So that's what I did.
Yeah, I bought the heckin' dip. Asterisk. Yeah, I bought it. No, that's for sure. And I think we continue to buy it. I think there's really a few layers that I think really stood out to me, and one of them specifically is speculative. The first one is, yes, Elon Musk is becoming this like self-proclaimed sort of like Bitcoin god. And I think for folks who are coming into the Bitcoin space and buying on the sole, I guess, reason being that Elon Musk shilled it and said that you should buy it and it's interesting because he tweeted it, you miss the whole point of what Bitcoin is all about. By deifying, and I Googled that, that's a real word, making something a god. by deifying this one person, you have inherently, or really, I guess, inadvertently centralized and intended to be centralized asset. Bitcoin doesn't really give a shit what Elon Musk says, and that's really the point. I do want to go into busting volatility a little bit after this, but I think folks really need to kind of check themselves before they financially wreck themselves if they're buying into it because of Elon Musk. Because at the end of the day, the whole point is to really separate church and state, or rather government, from currency and store of value. And to your point, Chris, about like who would transact with Bitcoin to buy a Tesla, someone who doesn't understand Bitcoin at this point, because we're still deeply in a price discovery mode of trying to understand the true value of Bitcoin. And we're not at the unit of account where Bitcoin, where, global trade is denominated in Bitcoin. And that's sort of the thesis, is that it would overtake gold in the store of value and then become the unit of account. We're not there yet. So people who are buying Bitcoin and then buying a Tesla are just buying it because they're bored potentially and maybe have too much liquidity. So yeah.
And I definitely think, I mean, we're so early with Bitcoin, and I always say it's hard to say when you're saying like Bitcoin's $38,000. I'm well aware that that's larger than some people make in a year. If you're working on minimum wage and 40 hours minimum wage, like you're not making more than I think it's at 38,000, 39,000 as we're recording this, which is obviously a far off point from where it was at its all-time high of like 64K. But it's just, if you think Bitcoin is going to replace gold, which I think it's quite literally a billion times better than gold as a store of value, we are hovering right around like 800 billion market cap at this price.
I think it's a little lower right now. We might
600 billion.
I think in the 700s. I think we're low 700 billion, but it doesn't matter.
Even if you figure, if it goes up to over gold's market cap, which is 11 trillion with a T, 11 trillion, that means that Bitcoin's price would be right above $500,000 per Bitcoin. And that's not even including, I think, the safest or most conservative. It's way better than gold in terms of its transacting, portability, divisibility, durability, all those different things Ben and I have talked about in the past. So we're going at least above 11 trillion. And that's not even including 18 trillion of negative yielding bonds. So like, why would you hold a negative yielding bond? The only reason you'd ever hold that is you think they're going to, the federal government or central banks are going to, or the Fed are going to drive interest rates slightly negative, lower. We're basically at zero. If they go slightly negative, that's the only way that you'd buy a bond, because then the bond price would appreciate relative to the interest rate that it's giving. But basically that trade is over. Like the trade of buying bonds and then selling them as interest rates drop, like we're at the bottom. Like the gas is already on the floor. Like, and there are some old timers that are like, no, it's still going to be a good trade. It's like, yeah, you've been doing it for 40, 50 years and it's worked, but like you're at the end of the rope. Like that's just the way I look at it. So if you think 28 trillion has to fit into whatever Bitcoin is, and that's just the tip of the iceberg, we can talk about equities all day long.
And derivatives, I think specifically derivatives as well. Yeah. The derivatives market is just massive.
Yeah, the derivatives markets alone. I mean, if you think of just the global bond market's 126 trillion. So you think eventually all of those are going to be negative yielding. Yeah, they're going to tell you CPI, the inflation rate's only 1% or 1.5 when we're seeing lumber prices at 600% or 300%, or like, they can say whatever they want, but at the end of the day, when you're trying to buy a car and it's 3 times more expensive than it was last year, you're trying to buy lumber, it's 4 times more expensive than it was last year, trying to buy a house, it's 25% more expensive than last year. It's like, what CPI, like what inflation are you not talking about? Like, because that's obviously what you're trying to give us.
Yeah, no, I think that is a very valid point. And inflation, and that really, I do want to wrap up one point about Elon. Let's move on to the next one. But I do really want to talk about that point about what Bitcoin is purporting to solve. I mean, I'll jump right into sort of the, Bitcoin has no intrinsic value. I mean, I think people like to say intrinsic value just to really quickly dismiss it, but not understanding what intrinsic value is. It really is just a calculated valuation, or assigning a price, or really not necessarily just a price, but assigning a valuation to an asset based on a set of assumptions. Bitcoin, and I just posted this on my Instagram, It was just Bitcoin Pizza Day, so happy holidays. The first Bitcoin in today's dollar terms, they bought 2 Papa John's pizzas for 10,000 Bitcoin. That would have been $377 million today. At the time, it was like $20 total, maybe.
Yeah.
Bitcoin, what it's purporting to solve is the ability to have the option to store value. And what we're seeing in today's fiat, economic, I guess, environment is, fiat currency is not volatile. It consistently loses value and prices go up because that buying power is going down. And we're seeing Bitcoin is sort of a safe haven against inflation. And I really do invite everyone to have some exposure to Bitcoin because it's a hedge against the failure of your own government. It doesn't need to just be the United States, but by owning fiat, you're trusting in the success of any given nation or sort of sovereign state. And I think we've maybe said on this episode or not, but you don't buy fire insurance when your house is already burning down. You're not going to get approved. You got to get ahead of it now. You don't have life insurance. You don't buy life insurance when you're dead because you're dead. And Bitcoin truly is that insurance policy with asymmetric upside. And that's the trade. That's the value. The value is you have full sovereignty over your buying power and you don't have to trust a government. And I think COVID really brought out some of the disillusionary experiences that, the government can't just snap its fingers and fix problems. And it certainly can't fix financial gripes and situations with the tap of a keyboard. It just continues to sink us to the bottom. So Bitcoin does have intrinsic value, and that value is to allow you to save.
I'll just add to that, I guess. So I got 3 quick points.
Yeah,
one was a cool thing. We just had John Vallis on 2 episodes ago by the time this one comes out. It was a great episode. But also he had a really cool clip that he narrated. And he basically was saying, like, you're not chosen who you're born to in terms of your parents. You're not chosen the country you're born in. You're also not chosen, you've never chosen the government that you were given. So, whether that's authoritarian like China or very communist or, like socialist like Russia, or you're born into a capitalist society like the United States government, which still does plenty of wrong. And as great as I love America and how great it is, like it's not without fault. And that is very apparent over the last year or last 14 months for sure. So I thought it was a great comment by John. I think Will Clemente had a great point too, that he was showing that a lot of the Bitcoin movement in price, he said something like, he was showing the liquidations of Bitcoin, and those were long and shorts of Bitcoin that were getting liquidated. So as Bitcoin's price went up, all the people that were shorting Bitcoin got liquidated. And on the opposite side, all it takes is a little bit of Elon FUD or FUD in general or China or whatever it may be. And if you have a long leverage position, if the price starts to drop and then you get margin called, like instantaneously, they liquidate your Bitcoin position, and then that drives the price further down. And then all of a sudden, someone else that's leveraged, you were leveraged at 100 times or 50 times. Well, when your 50 lever drops, it drops. Now someone that's 20x levered, 25x levered can get liquidated. And then someone that's 10x levered, and then 5x levered, and then 2x levered, and then 1.5. Like, so it's a cascading effect. And he was showing in his Glassnode metrics that there was like $77 billion of Bitcoin liquidations in longs that happened like instantaneously. So it just goes to show that, like, and I think a point he was trying to make is like, this is how the stock market should be in theory, like the S&P 500, the Dow Jones, like all that. But there's all these different levers in our financial systems that allow that not to happen, that hedge funds and big banks and other things can take advantage. And like you're left holding the bag of something, of a worthless company like Enron or, like pets.com, like with the .com bubble. Like they can do things. They can buy back their stock to push up their price. They can, ask the Fed in a way to like, drop interest rates. They can lay off workers. There's different things they can do. In Bitcoin, it's I hold Bitcoin or you hold Bitcoin or someone else holds an option to get my Bitcoin because I leveraged up on it. And the reason it's so instantaneous is because it's digitally and it can happen in an instant. Literally, the price drops, I get liquidated, it gets sent to them. I have no more Bitcoin. I didn't get margin called. It just happened. Like that's the way it is. And you think like he said something great. It was like the volatility is the price you pay for the great gains that you would get otherwise. And in true nature, like our stock market should work that way. It doesn't, because there's, in the companies and people's best interest that it doesn't do that. But in theory, that's the way it should be. And I know that's like a hard concept to wrap your mind around or unravel what you've been taught, basically, but that's the way it should be.
Yeah, and you actually put out a really good tweet that I think you said, like, money is made in the green, but wealth is made in the red.
Yeah.
And I think that's exactly what you said. Something like, I think that's pretty damn close. And I thought that was a really great point, because people, and I do want to transition to the next FUD,
Yep.
but I think people think that it's really, really easy to just get rich on cryptocurrency. And I want to just like define cryptocurrency as it's Bitcoin. We're not going to talk about other altcoins right now for a little bit, but it is not easy to have been a holder of Bitcoin. I mean, just kind of put yourself in that person's shoes. Let's say you own Bitcoin at $10, and let's say it went up to $100. For folks who have a Robinhood, if you saw, your Tesla stock jump from whatever it is now to from 700, what is it right now? 700, 600?
I think it's a little bit lower. 600 probably.
600. Let's say it's 600 and it jumped to
604.
6.
Yep.
And then it went to 6,000 tomorrow. You'd probably sell it.
Yeah.
So to have Bitcoin, owning it from $10 and not selling it at 100, well, imagine that situation where you bought Bitcoin at $10 and now it's $60,000.
Yeah.
Hodling is not easy, but continuing to accumulate in those red days, it certainly is spicy. So that whole process is a part of the entrenchment, and it's important to allowing Bitcoin to grow to what it is today.
American Hodl said something great. He's like, hodling is not easy. The concept is easy, but the actuality is very difficult. And I think it's a perfect point. I lost $0 on the Bitcoin moving up or down. Actually, I got more Bitcoin. So in theory, I got more rich. Yeah, I paid more expensive premium when it was at 64, but I got cheaper sats at 38K. So like, if you look at Bitcoin as a unit of account, and even for stocks or any equities or anything, you don't lose money if you don't sell. Like Warren Buffett's famous quote is, our favorite holding period's forever. So if you don't sell it, you never lose money. And I just think that's really funny. I'll add one last thing and then we'll get on to the energy FUD. But I know like Elon, it's kind of weird. It almost seems like he's moving markets and the SEC really can't touch him because of how unregulated cryptocurrency is. And like it's weird that it's almost seemed like he was doing it to allow his friends to buy in. Like it just seems very sketchy. Like he says something that like, we're not going to accept it. The price moves down. And then when the price finally hits a bottom, he tweets like, Tesla has diamond hands. We didn't sell any aside from the 10 that we used to see liquidation. So it's like, dude, are you just trying to stack more personally, or Tesla buy more? We won't know till the end of the quarter, I guess, in like beginning of July. But it just seems very odd and weird. And like the SEC knows they really can't go after him. And also the SEC could tap him because right now he's asking for more renewable credits for Tesla. So it's just so funny that they're like, hey, we really don't like this energy Bitcoin thing. Say some bad stuff about it, and then we'll grant you like the credits you're looking for. So it's all a catch-22 basically.
Well, I don't even think it's a catch-22. I think it really just is a marketing scheme at the end of the day. Like I feel like folks are giving Elon Musk too much credit that yes, he's manipulating markets. I'm sure he's doing something sketchy in the background, but it's also a marketing scheme. Like he knows that Bitcoin is not at the maturation point where it's sort of like a globally accepted currency or even just sort of a domestically accepted currency. That's not what it is. Like really the way that I think about it is sort of from Elon's perspective is, let's say on Tesla's website, they opened it to have Google Pay, Apple Pay, and Venmo and Bitcoin. I think it's just opening the payment channels for more people to buy Tesla, because let's say you've got a shit ton of Bitcoin on your balance sheet as a person, you want to own a Tesla. It's like, hey, I'm a millionaire. Why not, instead of just going through the process of liquidating my Bitcoin, I just send them my Bitcoin. I get a Tesla. Chris, honestly, I think that's what he's doing. I think he's just opening payment channels. And the reason why he's, I think, specifically targeting the energy, and I think this is a good transition into the energy FUD, that, Bitcoin is just boiling the oceans and all that nonsense. It's been around for 12 years. The oceans have been warming since the forever of human existence. So it's certainly not correlated to Bitcoin. Anyway, I think it's twofold. It is certainly the subsidies that you just said. He's heavily subsidized. It's the only reason why Tesla is profitable right now. And
aside from his Bitcoin holdings that he has. So, well, I guess
only
that's
liquidated 10%. So
yeah.
I guess on paper, yes, on paper, yeah. And I think there's still their cost basis they're still positive by probably the
Yeah.
5K. Second, I think truly based on what we saw from Michael Saylor's tweets, and we're talking May 25th, 2021, he had a conversation with Elon Musk about Bitcoin mining, and Elon Musk sort of talks out the side of his mouth and says, had conversations about Bitcoin mining. Sounds promising. So within a few days, he's already feeling good about Bitcoin mining. It's like, what was said in that conversation that you couldn't Google yourself? I think Elon Musk is going to come out with Tesla mining products or a mining division. That's what I expect.
Yeah. And I mean, Elon's not stupid. I mean, we all know this.
No,
And
he's
the
not.
crazy thing is that like the energy FUD, like you bought it with Tesla just a few months ago. Like you knew how much money it takes. It's right there in front of you. Like you can't just be like, oh, I didn't know 3 months later. It's like you can't tell me a guy that's worth 140 billion, 30 billion, whatever his net worth is right now. Like you can't just be like, oh yeah, I just threw 1.5 billion for no reason. I guess you could say that about what he did with Doge, or some people think he's got like that largest wallet of like that 1.6 billion or whatever the price appreciation of it is. But it's just like he bought it for a company, like a publicly traded company. He obviously looked into the energy usage of it. Like,
and his board had to approve it. It's not, people talk about Tesla like it's Elon Musk. Like,
yeah,
he had to step down as like chairman. So
Larry Ellison is on the board of that company. Like, you don't think he was like, yeah, like this Bitcoin thing, why not? Like, Larry Ellison runs Oracle, a computer software company. Like, they definitely all looked into it. It's not naive. It would be naive to think, oh yeah, they just bought it for no reason. Like, that would be stupid.
Yeah, I agree. And building on sort of just contextually understanding Bitcoin's energy intensity. And I want to sort of explain how energy, I guess, really works and how really miners are incentivized. I think when folks look at the FUD that the mainstream media pushes out about Bitcoin's so energy intensive, they compare it to every country that they possibly can to find a comparative. They're not drawing comparisons against like parallels. And I know we've talked about this before. There's a lot of things I do want to talk about on the energy side, but comparing Bitcoin versus a financial parallel or analog is a far more apt comparison, because we don't challenge the energy intensity of our home dryers or our washing machines or our microwaves.
Or how much Netflix you watched. You know what I mean?
Netflix, you're watching the Kardashians or The Bachelor. Like, if I came to you and said, hey, you really wasted a lot of energy today watching Netflix, like, yeah, a lot of us did. I mean, Netflix is a hundreds of $billion company. They use a lot of energy. Bitcoin is a financial settlement and sort of like medium of exchange, and it's sort of digitized the whole financial system. It provides an alternative to the legacy banking system. And if you just kind of think about it, this, and Chris, we've talked to this to just the end's length, that in order for the banking system, we'll just talk about the United States, I guess, and which applies to every country.
Yep.
Mostly, you think about sort of every TD Bank, Chase Bank branch that is running air conditioning, it's running lighting, servers, computers,
ATMs.
people that, ATMs, the people that need to drive their cars to get to their office location, the people that need to eat the food at that office location because they need to be fed because they're bankers, the amount of energy that's required for, just even look at the armored trucks that are moving, paper currency to and fro each bank. The paper money also needs to be printed on a press. You need to chop down trees. You need to pick cotton. You need to employ people to pick cotton. You need to use land to grow cotton and trees.
Harvest land in order to
harvest land. And then, not even talking about that, let's talk about change, the most useless piece of money. You have this
that you're minting at a loss. Most of them
at a loss. The money is worth less than the commodity. Well, I'd have to check those numbers, but there was a time where no, I think that's even more accurate now because metal prices have just skyrocketed.
Yeah, so, at least the penny and the nickel are minted at a loss, and they've been minted at a loss for at least a few years.
I think so too. I think maybe decade plus, but we can confirm that. so mining the precious metals, having to smelt those coins after they've been recycled or reclaimed. That's something that we do at our company. And smelting is one of the most emitting industries in the whole world. So you talk about that, and you're talking about, sure, Bitcoin uses energy, but let's talk about what Bitcoin miners are doing and really their energy profile. Energy doesn't simply exist in space the way that we use it as humans. We're not efficient enough to just grab sort of like raw energy from the air. It requires a sort of intermediary, and that could be, electrodes, or solar panels, wind, spinning a turbine, burning something to create steam to spin a turbine. Where at the end of the day, we're usually just spinning something or making electrons. That's really how we're capturing
Yep.
power. Bitcoin miners are wholeheartedly incentivized to find the cheapest power that exists on the face of the earth. They are agnostic to location. They are agnostic to company. They are agnostic really to power. But right now, the power that makes it is the cheapest is solar and wind. And I think people are not recognizing that Bitcoin mining, a miner can just plug into a solar farm and they're using that energy. They never hit the grid. They're never stealing electrons from your house. And what's really fascinating about Bitcoin mining is, let's say you have a methane field in Siberia that they would otherwise just be flaring, burning it to make
Mhm.
sure that it doesn't explode. A Bitcoin miner can pump that energy, that methane, into a generator and run their mining. They can get access to totally trapped, totally wasted energy. They are really, I hate to say it, but they're the bottom feeders of wasted energy. So for landfills that are flaring gas, for oil fields that are flaring gas, Bitcoins love that. And
Yeah.
I don't think people recognize that. They're
Yeah.
incentivized for the cheapest power.
I pulled up Adam O, also known as Denver Bitcoin, is his handle on Twitter. He said, "My dad and I invested in Bitcoin mining 2 years ago. We have mitigated more than 11 million cubic feet of methane emissions fueling our engine and gen set on waste gas." Basically, what him and his dad do is they go to oil fields that, normally what they do is they're mining for oil or drilling for oil, and basically it's for in the United States. And normally what they have is a flare. So they're burning
Yep.
the
That's
excess
exactly. Yep.
methane that comes off it. It's very common practice. They can also use it in other byproducts of plastics. But instead of burning this methane that is emitting either CO2 or even worse, they're just emitting the methane, which some states and some companies do. They just emit the methane instead of even burning it off, which both are bad. CO2 or methane. Methane's even worse than
Methane's
the
way
environment,
worse by
actually.
like 30 times. Yeah.
Yeah, 30 times worse or 28 times, whatever it may be. He's actually using that as a fuel source. And so normally the companies are also the EPA and whatever their state jurisdiction is for environmental regulation. They have to either pay a fee or a fine or whatever it may be for the amount of methane that's coming off. Well, if he's using it as a fuel and they get even 1 cent or a fraction of a cent, instead of getting fined, they're actually getting a profit. So that's like very, very good energy in the sense that like they went from getting charged 25 cents per, million tons or whatever it may be. I don't know the pricing, but basically instead of getting charged or penalized for the amount of methane or CO2 that they're emitting, they're now getting it as a small profit, even if it's zero that they were giving him, which they wouldn't, they'd sell it as a product, that they get money for something that would otherwise be an expense for their business. So this is good. It's taking out things that are bad for the environment and used for mining and securing the soundest and best money on the planet. And people don't get in the United States, and I get it, it's like a home country bias. Like, we are very fortunate. We are extremely fortunate. The stats are like, even if you're poor in the United States, you're in the top 10% of the world, which is just like mind-boggling to think. And I know there's wealth disparity in the United States, that's for sure, with Elon Musk, Jeff Bezos, the amount of wealth they have compared to the rest of like the other 90% or 80%. But it's just crazy to think that like Venezuela doesn't have that benefit. Argentina doesn't have that benefit. Greece doesn't have that benefit. Italy doesn't have that benefit. Yeah, some countries are better than other, but when you have a government that's, doing very bad things, killing its citizens, hyperinflating its currency, and then taxing them on the currency that's hyperinflating away at ridiculous rates, it's absurd. You know what I mean? Like, you basically, Bitcoin is helping secure not just the United States and China can't see it. And that's just the truth. We're too big of economic powers until things truly collapse.
Yeah, I mean, they don't want to see it. That's the point, Chris. Is
Yeah,
truly
they
like
don't want to. But all these other countries are going to collapse first, obviously, because right now the Chinese,
maybe.
the U.S. dollar and China's output are like what keep us afloat over these other countries. Like all these other countries are going to be the first ones to adopt it. Even Jack Mallers from Strike was in El Salvador, and they have a similar thing to Venezuela or any of the other countries I mentioned that they are now transacting in their markets on their smartphones, whatever their crappy smartphones, in Bitcoin. So, and it's even funny because they don't look at it as like Bitcoin's price moving so much. They use like if an apple is 5 satoshis, an apple's 5 satoshis. You know what I mean? Like they've kind of pegged in their markets what the price of things is. Like they don't care if Bitcoin's a billion or 10 cents because that would only be valid in a country like China or the United States or a more of a first world country that we're trying to get into the other fiat currency. They don't care. They're like, this is sound. 5 satoshis will always be an apple, whatever it is. And it's crazy. I mean, it's really helping their country. They're impoverished, transact and not get penalized for it, basically.
Yeah. I have one point on what you said, and then I also want to go one wrap up point for the energy side. But that point about like that they don't care about the price, like that is a real thing, and I think that's what really is unique about Bitcoin, and really, I mean, it applies to all cryptocurrency, is a part of this like volatility price discovery process in which we're trying to figure out what the value is. That's really what price discovery is. It's going to inherently be volatile, and you're going to see spreads on the price of Bitcoin. And what I mean is that the price of Bitcoin is not centrally housed anywhere. It's really different because let's talk about Tesla. Tesla is listed on the NASDAQ. That's the exchange, right? So that price is centrally located. You can look it up on Google. You can look it up at Yahoo Finance. The price is what it is, unless there's a time lag. The Bitcoin price, let's say on Swan, on Kraken, on whatever other one,
Coinbase,
whatever.
Whatever.
Sure, Robinhood. Those exchanges are totally separate and distinct entities. So the price, you could see thousands of dollars spread between a price on one or the other because the price of Bitcoin is not centrally housed. What's happening and what's unique about Bitcoin versus all other assets is it truly is a buyer and seller price discovery process in which on each respective exchange, they're deciding what is the fair market value for Bitcoin. And because it's still early in its adoption, it's going to be volatile. And because it's not centrally located, there will be volatility, there will be spreads. So that point that you made, Chris, people can be agnostic to the price of Bitcoin because it has value for whatever it can transact. And I think that's brilliant.
Yeah, and Nigeria, when they banned Bitcoin for all of 3 weeks before they realized it was a bad idea and they were going to lose out on it, the Bitcoin prices, it was in February or March, I believe. And the Bitcoin price in the United States was around 50K, like $50,000. In Nigeria, it was trading at a premium of $68,000. And mind you, this was illegal. It was illegal in Nigeria they shut down the exchanges first, so the on and off ramps, but it was even illegal for their people to have it. So it's kind of funny that they shut down exchanges instead of telling people like you need to give it to the exchange, get the currency back or whatever. But people were trading peer to peer at a value of $68,000 with conversion into USD. So it's trading at $16,000 or $18,000 above spot in the United States. I mean, in theory, if you could be a great businessman or woman and fly there, trade it, and then wire the money back home for your friend or whoever it is to buy it at that price, you could definitely make a difference on the spot. Obviously, 3 weeks later, they opened it up. They realized they had made a mistake, and they started accepting it. And the price kind of normalized back to more of where the States were. But it was interesting for, a few weeks. It was trading at $18,000 spot or $15,000, obviously trading with fluctuation and stuff. But
that's just all part of the process.
Yeah.
Honestly, it really just depends on intra-market. And I think that's a really good segue into regulatory bans and government restrictions. I'd like to hear maybe if you want to give a point on this, or I can take on the first point. How do you feel about the risks of really government bans in the US or really anywhere where it may be worth being concerned? What are your thoughts on that?
Yeah, I mean, we're seeing this play out in the United States and we're seeing this play out globally. Preston Pish, I think. I know we always give him credit, but we love him here at our podcast. But he said something like, you don't, or I don't even know if it was him, but it was basically like, you don't ban Bitcoin, you ban yourself from the benefits of Bitcoin. And I thought that was kind of a brilliant take. And we're seeing that in the United States right now. Like, the New York is very strict in all their regulations with everything. And basically they're losing out to Miami and Texas. And they still haven't allowed like cryptocurrency, like, not they haven't allowed it. I forget the wording, but basically I know the Winklevoss twins, their company Gemini, it's an exchange for Bitcoin and other cryptocurrencies. They're listed in New York, but they're finding a lot of trouble with regulatory burden, with dealing with regulators and stuff. And Governor Suarez, or Mayor Suarez from Miami, is trying to entice Gemini to come down there. So it's like, it's a gamification of states are fighting for people to move to their states for, favorable regulations, not only with just cryptocurrency, but just with, freedom and doing whatever you want. If another state wants to lock down completely from coronavirus or aliens or, Bitcoin or whatever it may be, and you love Bitcoin, aliens, and or freedom, or doing whatever, you can move to another state. I know that's more burdensome on people that don't have as much money, but when push comes to shove, the people are going to move to where they find the most freedom and where it's. I'm reading The Sovereign Individual right now, and I know John Vallis brought it up as one of the good books to read. It's incredible. It was written in 97 or 98. And it's mind-blowing, all the things that they claim. This is written 23 years ago at this point. But yeah, I mean, not only are we fighting among states in the United States, we'll eventually, like if the United States were to crack down on Bitcoin, which I don't think they will at this point, other countries can pick it up and they can get that wealth or the wealth transfer quite literally from individuals moving there for the benefit of it. And I'll tee off with this one last little thing. I know there was an article. It was like Bitcoin, China bans Bitcoin for the 10,000th time. Give you guys a hint, people. In 2013, China didn't like Bitcoin. 2014, it didn't like it. 2015, and all the years between then and now. So they still don't like Bitcoin. And it's crazy. I don't know. That's just my 2 cents on all of it.
I think those are very good 2 cents. I would invest those 2 cents and get you a good 0.03 yield. That's a really good point. And China doesn't like Bitcoin fundamentally because so you made a point that like US doesn't and China doesn't understand Bitcoin. I think they really do understand Bitcoin. I think they do truly perceive the threat. I mean, it hit $1 trillion market cap. That's nothing to scoff at. Like this is not a fad. Fads don't last 12 years, right? It's 2009, 12 years.
Yeah, 12 years.
So fads aren't 12 years. I mean, my cargo shorts aren't in season anymore. It's only a few years. So not a fad. So China can't control its citizens with Bitcoin because it doesn't matter how much money you have or who you are. We saw this in the Bitcoin civil war with the fork wars when we saw Bitcoin Cash come out about this, and they were trying to just like worry about the scalability. The nodes and really the users of Bitcoin determine the fate of Bitcoin. The protocol is set. It's not the miners that have the control. It's not the wealth. It's not proof of stake like an Ethereum would be, which is really our fiat system. The more money you have, the more control you have. If you own 10% of a company, you have voting rights and you could be on the board. Bitcoin's not that way. I think China recognizes that. And I think that's why they're trying to create their sort of digital yuan where you can instantaneously tax any transaction. You can monitor, control, you can route payments to a specific group. So let's say a certain race, creed, belief is making transaction. You can wire that money to a different race, creed, because they have full sovereignty, full visibility of their own currency. Bitcoin doesn't afford that to sort of like an authoritarian state. And I just want to make this one point. I wrote this bullet down on 2010, searching via all Google search sites and was banned in mainland China. And any attempt to use Google search resulted in a DNS error. And sort of like my little tongue-in-cheek joke that I wrote after that is Google's not doing well, right? I mean, wrong. It's one of the biggest companies in the world.
They banned Facebook too. They banned a lot of different companies. They banned, I think, even Amazon. You're not allowed to. That's why Alibaba's in China. Like, I'm pretty sure there's a lot of different things. And
yeah. And that's where I think the US did really, really well in the early years of the internet. I think the US really chose to sort of let the free market decide and let it play, and sort of discover a brand new sector as opposed to regulate something that wasn't fully mature and just look at what has been created. Like, yeah, it's good and bad because you see the wealth disparity, but I think a lot of that is tied to the Fed as well. I still really believe that the M2 money supply is a driver for a lot of this wealth disparity. There is an injection point for money, and it's not at the bottom. That is for sure.
And
But
even I'd love to just add to that point. So a lot of people think even when you're getting your stimulus check, which is great, I know it's helped people, but it's the Cantillon effect. Like the money got to you through the bank first. By the time it hit the bank is already using your money. Whether you see the notification on your phone or not, like or you go on the website or even you go there to withdraw it, like the bank is already leveraging out your money to get more loans, to get more money. Like they've already gotten the benefit, whether you withdraw it immediately upon receiving it. You know what I mean? Like that's the thing that people don't understand. And even not only that, like the wealthy, like you see a lot of the big corporations, they got the PPP loans and stuff, and they got things before we got the stimulus checks. Like the businesses and the entrepreneurs and the billionaires, like they got their payday before yours. We were just kind of fighting over the scraps. And you could look at that as fair, unfair. I won't put my 2 cents in there, but like that's the way it is right now. And Bitcoin is the true fair thing it is. Yeah, like do I wish I was buying it at, in 2012? But I still see this as a long way to go from even there. Like, yeah, had I bought in 2012 $100 worth, I would have been a multi-millionaire, almost a billionaire, whatever it may be. But like that could be like with anything. Like had I bought, I don't know, you could buy like Amazon when they're first starting off in 98. Had I bought $100 worth, I'd be a lot wealthier as well. So,
and the price is still going up on that too.
Yeah.
Maybe we should do another bull versus bear episode on Amazon next. We did Tesla, and a lot of people actually reached out about that. They like the bull bear, so maybe we do Amazon next.
All right,
that'll be a spicy one. Anyway, to your point about us being early, we are still very, very early. I mean, just the fact that we're still having these FUD discussions, and I'm not by any means a veteran in this space, but like you can look at articles. I mean, that's the great thing about the internet. You can go back in time as far as you really can. These discussions about the energy use, about government ban concerns, about really anything that we're going to talk about here, it's been discussed well before our time. And estimates are saying that 46 million Americans currently own Bitcoin, which is a really, really dummy estimate at the end of the day. Like it maybe it's close, maybe it's not, because it's pretty hard to sort of do an on analysis of individual addresses. So
and I think it was weird too, because technically some of those Americans could have multiple wallets. Like I know even for me, I have like multiple wallets. So like,
and the flip side of that too is one address could be multiple people, like especially in an exchange or for a family, like an exchange, like a Kraken, they custody their Bitcoin to obviously get it to their clients. So that address could be millions of people. I don't know how many customers they have, but it could be one address could be millions of people. Anyway, they estimate 46 million Americans. That's 14% of the US population. We are in no way at the end. So the price still has more discovery to go. And the point being that I really wanted to make on that before we transition next is we're at 14%. Okay. But let's say in a few years time in the next bull cycle, which maybe this one's not over, but let's say that number gets to 40 or 50%. To your point, Chris, like Miami is now trying to pull from New York, and it becomes sort of a game theory. The enemy of my enemy is my friend, and that's Bitcoin. Bitcoin is the enemy of my enemy, where if you ban something that 50% of sort of the voter base uses to store their wealth, you sure as hell don't want to screw them all over financially. Because if I were to hear that, let's say half of my net worth is stored in Bitcoin, if I hear that the US is going to seize that, I'm probably going to fly to Germany. Honestly, if it gets to that point in 4, 5, 10 years and Bitcoin, and I continue to believe in it, which I will, I don't foresee that changing. It really does incentivize sort of a diaspora or a fleeing to elsewhere to protect your assets.
Ben, full disclosure, I would rather destroy, like my seed phrases, rip it up, forget them, destroy the devices that all my Bitcoin is on and go to zero, than like fork it over to any government. So like, if in the great end of like the great reset of, we're coming after you, it's like, fine, like, what are you going to take? Like my clothes off my back? Like that's basically what it is. Like I would rather do that than fork over any of the wealth that I've stored in it.
And that's a good point. I mean, we saw some of the news articles about that person who had like 200 something million dollars locked up in their wallet, and they have a couple guesses left, or maybe they don't have any left at this point.
You could even outsmart the government. I know even some people are talking about this. If the government were to really come after you, Some people were talking about using a multi-sig to time lock your Bitcoin.
Yeah.
So some
I don't
people
think
are
there's a
like,
real concern here, honestly.
no, I don't. I think you could always be one step ahead of the government. Even if they were to come, you're like, okay, we time lock this for 50 years, and like most likely the people that are taking it, you'll be dead in 50 years, and I'll figure out a way to get it back. Whatever it may be, basically.
Yeah, and that's the nice thing. I mean, like what I was saying before is like that person who had their $200 million locked up in their cold wallet. It, it's one of those things where like even if you're sort of doing nefarious activities, like Apple won't unlock your iPhone. Even one layer above, if you lose your password, that's it. It's done. It's like if you were an Egyptian in the time of the pharaohs and you had sort of a sarcophagus of gold and it was buried under the sand. That's it. But the point being, like, the gold is still valuable. And if you lose your Bitcoin, Bitcoin is still valuable. If anything, it's probably going to help its sort of floor on the price because now the supply is lower. So I think we're very early in the adoption. That's my main point.
Yeah, Satoshi even made a joke. People that lose their bitcoins are actually doing a service to other holders of Bitcoin. That it's going up in value because there's even less of it in circulation that'll ever be around unless we figure out like quantum computers and stuff. Someone also made a great point. If you were to, I forget what it was. Someone was saying like, why do people still die for gold? Because it's still worth something at the end of the day. Where if you said I buried like all of my family's wealth in fiat currency, would you actually go after it if it had been hundreds of years? You know what I mean? Like that's just funny.
I like that. That's pretty funny. Okay, do you want to move on to the next FUD?
Yeah.
Okay. This is, I think the rest of them we can either continue to do deep dive or we can sort of rapid fire them. Let me know after this one what you're kind of thinking here. But the one I really do want to talk about is Bitcoin is only used by criminals. I'm just going to come out and say it, and just that's nonsensical. And I'll sort of give my point, and I'll let you elaborate. And I have a little bit of data points that I can share. But fundamentally, what is Bitcoin? Bitcoin is a public ledger, and that is. So the blockchain is a public ledger, and Bitcoin transactions are stored publicly on that ledger. And every single person who has really an internet connection is able to see every single transaction from the beginning of time as if you had downloaded all of Wikipedia. What an awful place to sell or buy drugs, where it is the most permanent sort of, I guess, account or really just record in human history. I mean, the whole point of Bitcoin is to incentivize verification of a public ledger. I mean, that there's nothing else like that. Yeah. If you were going to do anything illegal, you should use the US dollar. And that's the main point is people do, because it's not digital. So let's say you have in movies, think about it. In movies and TV shows, they're still using briefcases full of cash because the CIA isn't notified when you hand someone $100 bill. They don't know that. It is simply paper and mixed cotton or whatever else it's made with. But before I even go into sort of the veracity of these claims, just thinking logically, why would you use a public ledger to make illicit transactions? It is traceable, and that's something that sort of Taproot is trying to resolve with the privacy issue. But Bitcoin doesn't. It tracks everything, and everyone sees everything. It's not that it says, "Oh, Ben's." It's not Venmo where it says, "Oh, Ben, thanks for the drinks." Thanks, Chris, for the drinks. You see an address, but you can sort of do a traceability study on transactions. It's just a horrible place to do illicit activity.
My thing is like, yeah, maybe you can get away with it for a while, but you know what? They got Al Capone on. They got him on tax evasion. They didn't get him on any of the murders, any of the other illicit businesses he was doing. They got him on tax evasion. So eventually it'd come around to bite you if you're doing all these transactions or transacting with it. And like you said, it's a public ledger. It's even worse to hide than doing me handing you cash for something.
Yeah, I mean, that requires someone to physically see you or see you on a camera. Bitcoin, everyone has seen it in some way, and it may be anonymous, but everyone has seen it who has a copy of the ledger, who's running a node or is mining. And I just want to give a couple quick stats, and then we can move. We can probably skip intrinsic and volatility. We can, unless you want to. But in 2020, banks worldwide paid $15 billion in fines for money laundering. And banks are required to submit, I think they're called SARs, suspicious activity reports. They are not at all required to act on those reports or those findings, but they are required to submit suspicious activity where they can sort of see if something is potentially illicit or it's in using the word in the definition, but suspicious. Think about that. Okay. the banks worldwide paid $15 billion in fines for money laundering. They supported money laundering. That's not that someone did it. They supported it. In 2019, a report posted that criminal activity represented 2.1% of all cryptocurrency transactions, or roughly 21 billion worth of transfers. Now let's fast forward in 2020 to be the same year as this fines for global banks. In 2020, the criminal share of all cryptocurrency activity fell to just 0.34%, or $10 billion in transaction volume. Now, to context set, yeah, 15 and 10 sound similar. They're not whatsoever. $15 billion being the fines is a kicker on the massive volume of illicit transactions. And I saw a report, I thought it was $4 trillion, okay, of illicit volume of money going through the global banking system, okay? So we are talking apples to like a like country. We're trying to compare apples to like the Pacific Ocean. They're just totally different things, and one is far larger. We're talking the entirety of the volume, the entire value transacted illicitly on Bitcoin is $10 billion. That is less than the fines that the banks had to pay.
And you know
Ridiculous.
for a fact the CIA or the FBI want that number to be way higher. Like they wanted that number to be 90%, 100%. Like, you know what I mean? It's just so funny. Even just what you're talking about alone, like the $4 trillion of illicit activity, like that's just mind-bogglingly big. And I don't know. We just keep saying like it's a public ledger. Like, why would you do something illegal? Like that's the worst place to do it.
Yeah, and people continue to keep their, JP Morgan, Charles Schwab accounts open despite
Wells Fargo supporting the Mexican cartel.
Yeah, paying for like glass, bulletproof glass, so they could accept wads of cash in like Mexico. It was either HSBC or Wells Fargo that did
those
that.
two, don't even get me started. Those.
Oh,
and then what's even the other thing? On like on all fiat US dollar bills, like 70% of them have trace amounts of cocaine. Like, what the hell is that? Like, that's not.
It doesn't have cocaine on it. I mean, even if you wanted to, you can't because it's digital. And like, let's get with the program here. It's just ridiculous, and I think it's one of those things. And it really is it's a good business proposition to be the opposition to a new technology. It makes for a compelling story. And it's just sort of job security to be on the opposite side of something new. And this FUD is just ridiculous because people aren't challenging the global banks enough about being held accountable. I mean, think about just like the financial crises that we went through because of the banks' failures, because of their lending, lack of rigor around that, just the illegal activity that's financed, money laundering, terrorist activities, drug sort of like wars that are going on. That's the other thing. You talk about outlawing Bitcoin. We can't even outlaw drugs in the United States when they wanted to. Marijuana is becoming federally legal, which it should be. And like, even when we were wholeheartedly fighting the war on drugs, we never were even close to winning. So good luck trying to beat something that has sort of full anonymity. You can just sort of store Bitcoin in a USB drive. Good luck.
And even going off what you're saying, when you make anything illegal, you automatically open up a black market for it. I mean, I hate to say that, and it sounds horrible. Like, obviously selling, children into selling children in general is illegal, but there is a market for it. It's horrible. Like selling illegal drugs like heroin, cocaine, like there's a market for it. Like, I hate to say it, but making anything illegal, there is always going to be a market for pretty much anything you can think of. And
yeah,
it's a shame, but even things that like it's horrible. Selling children, we can't even stop that. Like, how are they going to stop the biggest, best decentralized hardcore money in the world? You know what I mean? Like, it's kind of hard to misplace a child and see a child, and like I don't know. It's hard to fathom.
It is horrible. I mean, the things that go on in our world are really disgusting. But to the point about just like Bitcoin, yeah, it's just one of those things that it sort of like invites governments to want to participate in it. And it gives the United States, with 46 million people being owners of it, why wouldn't the United States just buy it and have it on the balance sheet and become a leader and get ahead again? I mean, like, if we feel like we're ever falling behind, now is an easy time to start accumulating, print some effing money and buy Bitcoin. That's an option. That is an option that we can do.
Yeah, and even some of those 46 million are U.S. politicians, and they're not just local U.S. politicians. They are high-ranking senators, congressmen, and women. So I think, I mean, let's be honest, I think a lot of the Senate and Congress are seeing like, wow, this thing's returning a large percentage. Maybe I should hold some in the case that, we, in our stupidity, mess up the global reserve currency, which they're doing a pretty good job of doing.
Yeah, I agree. We do have a few more points that we could cover here, Chris. Do you want to pick maybe one more? I think we're kind of already getting into the hour mark. We could do one more, or
Yeah, let's
pause
do
it
one
here.
more. I see the one I think I'm going to do. The altcoin competition. So
Let's
this
do
is
it.
something that I thought was really interesting. So I see Bitcoin as the hardest and soundest money. Any other cryptocurrency that's come after it, when you look into it, they have founders. They have it's basically you're investing in a company that came up with their other digital currency. So at the end of the day, and then even going into the FUD of altcoins, like a lot of them are powered by other servers. Like I know I laugh when people say that Ethereum is decentralized. Ethereum is super centralized. They run AWS servers in like that's for a
It's
lot
actually
of
ridiculous.
the nodes. I think like 70% of nodes are run through Amazon. Like Amazon owns Ethereum essentially by saying that. And then not only that, I think to run a node, I could be wrong. I think it requires 32 ether to be staked. So if Ethereum's price is, let's just say 2,000, that's $64,000 that you need to stake, and that's not even some that you can use. You need to stake in order to run that node, in order to verify everything. So even when Bitcoin, it costs $250, and you don't need to stake any of your Bitcoin to do so. You can run a node with 0 Bitcoin being staked. It's 250 fiat US dollars to buy the components to put it together, and then run it on. I use Get Umbral, but there's a bunch of different websites that you could do so.
And Chris can
Like
help you.
200. What?
And Chris can help you. Just reach
Yeah, I
out.
can definitely. That's coming soon. But yeah, even I think the coolest thing, or the craziest thing, not the coolest thing, the craziest thing about alt competition and other just cryptocurrencies in general, people are realizing fiat currency is so bad and so detrimental to your health and your wealth that they would rather stick it in something that is potentially going to go to zero, in the sense of like that's what we're getting with the money. Like when people are just like, I'll take a flyer on like baseball cards, which I love, sports cards and stuff like that. I'd rather take a flyer in buying this house that's way overpriced. I'd rather take a flyer in buying this altcoin called whatever, all these crazy names.
Yeah.
I don't know if you listened to the latest the Investor podcast. Lynn Aldwin, the brilliant analyst, she's like, yeah, there's a cryptocurrency. It's called Come Rocket Crypto. I
Oh
thought
yeah,
it was
yeah,
just
yeah.
funny that
It was
like
on CNBC. They had the logo on CNBC. I was watching. It was either Squawk Box or something. But they had like the little billboard, and I saw that logo for it. I was like, you guys don't know what that says, do you?
But Lynn Alden, a respected analyst, when she's saying the name of that, I'm like, this can't be real life. Like, that this isn't worth anything. But
I
like,
mean, it's easy to make a cryptocurrency. I think that's the point. Is like it's easy to make another one.
It's the shitcoin casino, as we call it. But there, you have a better chance with your wealth there than within fiat currencies. That's what I'm getting at. Like, altcoins are always going to be around because you'd rather take a flyer with that than keep it in fiat currency. And people realize that, whether it's subconsciously or consciously, that's what they're doing. You know what I mean? Like, it's insane.
Yeah, and my last point on this sort of altcoin craze is I guess maybe it's 2 points really, is people are trying to sort of like invent a flashy product or really focus on, and I'm talking about maybe the more reputable altcoins, really focus on the innovative side of things, because that's really what Silicon Valley and all the startup culture has really emphasized, is fail fast, just fail often. And that's really counterintuitive to
and break things.
and break things. And that's entirely counterintuitive and counter purpose to what Bitcoin was designed to do. Bitcoin really was designed with the end in mind. And, when you're building a house, you don't build the entire structure and then try and take a sledgehammer and shove the foundation underneath. You crack the concrete and then you break the house and then the house collapses. Bitcoin, measured, mixed, researched, poured, and let the concrete cure so that you could build the tallest skyscraper imaginable. And that, I think, is what hard to grasp for people who are maybe in the engineering side. And I'm not a programmer by any stretch of the imagination, but people really like the idea of innovating fast and just kind of creating the next big thing. But Bitcoin is totally different. It's not a product. It is a protocol. It is establishing a system of laws and rules and sort of a network effect that is functionally different from anything else in the fact that it is fully decentralized. And if you've already solved for digital scarcity, you don't need to do it again. That makes no sense, because this is my last thing. By definition, scarcity is that it is scarce. So by creating more units of something to solve for scarcity, you've instantaneously made it less scarce and thus overriding the value.
Yeah, and I guess the last one I'll add, I mean, Bitcoin's kind of the culmination of years of this happening. Yeah, I know its origin is, you know, a little mysterious, and Satoshi Nakamoto and how it originated, but it wasn't the first cryptocurrency. People don't realize that. Like Adam Back tried to invent, like with other cypherpunks, like they were trying to create other digital cash or e-cash or whatever it may be from the 90s. Like 92, I think, is the first records of, and I forget what
The
a lot
hash
of the
cash?
currencies, hash cash, and
It just
Adam
never
Back,
worked. It just
yeah,
never worked.
it never worked. So like this was the first time, like all the explanations of what they were trying to do, Bitcoin was the first one that worked. And, you know, I always like to say I believe in the free and open markets. Like the markets picked and determined and have shown that Bitcoin has been this far superior currency, or at least cryptocurrency or digital currency, whatever you want to call it in general, over the last, since its inception in, you know, 2009. And the reason it's still number one and has been for all these years is because of that. It's the hardest, the soundest money. And, you know, I think that's enough of our pitch of why we think it's the best one yet.
Yeah, and maybe we just honestly leave it at that. I think I'd love to do another chance, and I think that the point that I kind of want to leave folks with, and maybe with you, Chris, and wrap up however you want. But I think even if Bitcoin were to be overtaken in terms of market cap, that doesn't change the value proposition nor the fundamentals of Bitcoin. I really don't care what is worth more or less than Bitcoin until something is more successfully divisible, portable, scarce, uniform, whatever other characteristics, whatever definition of a hard money. I think that the key thing is the scarcity more than anything is just a decentralized, scarce digital asset. Until that comes along and beats Bitcoin, which I don't see how it's possible. It's got 12 years of network effect on it. I'm not worried about it.
And even going into that alone, like Bitcoin, not even just the networking effects, but and you're talking about the scarcity and everything. I forget where I was going to go with this. Hardest sound is money, playing along with that. Damn, I'm drawing a blank.
It's too good. It almost doesn't make sense.
Yeah. Oh, that was that. I'm glad you said that. A lot of the things that people see as bugs are actually features. Like they're like, oh, how slow the blocks, like how slow the transaction time is, or, you know, whether it's an hour. It's like, well, there's all these other things being built on top of it. Like the internet wasn't perfect when it was first born. Like we have the Lightning Network being built. We have Liquid being built. We have Taproot being implemented. We have all these different things. Like it was the perfect base layer. If you try and like increase the data size for the block size, then people can't run nodes and it's more centralized. Like, you know, there's all these different things. Like everyone was making fun of Elon when he's like, if we just make Dogecoin 100 times faster, or you know, 10 times faster, increase the block size by 10% and make the fees 100% cheaper, that wins. We already had that in 2017. That was the block size war. That was the Bitcoin Cash and the Bitcoin SV, Satoshi's value.
Happened. That
like,
whole conversation was discussed.
like history repeats itself, and if it doesn't repeat itself, it rhymes. And like that's kind of like the route we're going down again. It's just funny. I guess that's my 2 cents. I'll leave it there if you want to wrap up with anything else, Ben.
No, I think it's a fascinating discussion because Bitcoin is so transformative for society and has the potential to do so. Like the internet, I think there's a really good comparison actually. Like no one owns the internet at the end of the day, and think about what has been developed on top of it. Internet was the foundation for the digital revolution, and Bitcoin is the digital foundation for well, really it's
monetary
the foundation.
Revolution.
Yes, it's the foundation for the digital financial revolution. That is the platform. It's a paradigm shift. It's something that is not fully understood yet, and that's why it's so opportunistic. So what I'll leave with is continue to do your research, and if you see something that is a compelling FUD, send it our way. I would love to hear about it. But also do your research, and you know the only person you need to convince is yourself. We're going to continue to buy Bitcoin, and until that changes, it'll be in our newsletter. So thank you guys for watching. This was a blast.
Sounds good. We got a couple really cool things coming out middle of June. We'll keep that on the back burner for a little bit longer, but I'm excited for that. Keep checking out our website. We promise to be getting more to the show notes. We've kind of fallen behind on that, but we'll excited for the newsletter to come out. Thanks guys for joining us. Like, share, subscribe, comment. Go to our website, any of our social media platforms. Have a good one, everyone.
Bye.